Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 11th of March. All right, we're starting to get back to some sort of normal market conditions as there's a bit of anticipation of the Fed, US government doing some fiscal and monetary policy sort of action. But just check out the major currency pairs. This is what I like to see: the dollar pairs all going in one direction and the other pairs going in the other. So this is telling me we've got dollar direction and it's uniform across the majors. So that's a bit of a good thing to start with. It's the sort of first way you can identify whether the markets are behaving normally or not. Now, talking about unusual, once again, we do see a large bounce in the US equities. It seems to be this is the raw nerve, right? We've got a situation where if I just switch over here, just quickly give you a look at the US yield curve, right? The US Treasury yield curve. And that's just corrected significantly from the other day where it was down here somewhere. Now, that's taken a lot of pressure off, whether the Fed was buying bonds or whatever they were doing. It sort of seems to be working. And there's a lot of anticipation, as I said, about the US government doing, tax cuts and a whole range of fiscal policy or stimulus. Now, the raw nerve always comes back to the equity markets, right? They start to crap out and they start to get really antsy-pantsy. There's a lot of cash in the US caught up in the equity markets, and it's almost like they can't afford to let it go. But you know what? They're going to run out of interest rates shortly and stimulus, so something has to give at some stage. But right now, we're talking going back to the currency pairs, sort of reasonably normal market conditions. And if I just give you a look at the majors, right? We do have them starting to, really calm down. The price action is less volatile. Liquidity is coming back into the market. But what we've left with since Monday is check out a lot of the ranges here on the support and resistance now. It's epic, right? We're in the middle of nowhere. Dollar yen climbing back up through a couple of short-term resistance levels. Resistance now at 107. You know what? We've got US CPI coming out tomorrow. I wouldn't be surprised to see strong numbers. This thing pops back up there. I've seen weirder things. Euro just coming down to test that support level now. I'll just adjust that to the new low we've got. So Euro, it comes into play. It's going up. We've got support. Okay, it's going to create us an opportunity. This probably be the best pair to be focusing on right now is Euro, because it does have a tangible support level and it's been trading quite normally. Sterling with the big blowouts, it's back at 129, like in the middle of a massive range. I wouldn't be sort of getting overly excited about that. One thing that I am looking at is the big move here in dollar CAD, right? With the gap from oil from like $42 down to 30 or 32, wherever it was. Oil's starting to rally a little bit. Now, this should put downward pressure on dollar CAD. It's got a long way to come back down to where it was last Friday. So to me, if you're looking for a bit of a speculative trade, oil down below 137, the figure could be a good option. What do we need for that? Well, we get weak US CPI. That could be the catalyst for the push down there as well. Don't forget this, like oil war between Saudi Arabia and Russia is still only in its infancy stage. So we're going to see how that plays out. Now, just having a look at the general news, right? Just seeing what the market's sort of reading out there. Okay, so what we've got is dollar resumes descent against safe haven currencies in volatile trade. That's, as I said, in these markets, old news is like 2 weeks old. I mean, the dollar's gone up, right? I know you can say it's come back down like 50, 60, 70 points, but overall, it's just rallied 300 points back up. So it's a bit of a tall story, that one. The big focus is in the US is the potential stimulus packages. Okay, they're expecting Donald to come out and say, you know what, we're going to cut taxes. He's going to love this, right? Gets to come out and play the martyr, dropping taxes, more fiscal stimulus, et cetera, push the Fed into going to negative rates and all this sort of stuff. His dream is to have the Dow Jones index up around 40,000, I think. That's what his big dream is. All right, so that's where we are there, the news. Now, if I just switch back, give you a look at the where that pressure point is, and what I'm talking about is the risk on, risk off profile. You're going to start to see some odd things. Now, this whole conundrum started on Monday with the big drop in US Treasuries. We also had the oil drop like 30%. That was the catalyst for the panic. Now, if you have a look here at the correlation matrix, right? So look at the yen crosses here, all of them, okay, moving directly with the US equity markets. Now, you got all the yen crosses there, so they've all gone up. And what we're seeing at the moment in Asia is a slight correction. Now, that's part and parcel. Usually, go back into the 90s. Okay, if the Asian session went up, the European session went down, and then the North American session went up. It's just a bit of a cycle. They don't just keep going up through every session. So don't get concerned that these pairs are, there's a big risk-off appetite. They're not. They're only down slightly. It's just a correction in the move from the North American session, right? That's what we're seeing. Look at the Japanese equity as a bit of a guide to what's going on. You've got the topics in the Nikkei. Well, you know what? They're down like 0.5%. This is nothing in the big scheme of things. So what's happening with risk on, risk off? Well, to me, everything's calmed down. And it's all about this anticipation of the US government coming out and delivering some golden handshakes. Now, how do we measure that? Well, it's pretty hard, right? This is going to be a news conference. It's going to be splattered. When does it start? When does it stop? Well, it's pretty hard to work out. And so don't forget, don't get caught up in the media. The media is there to sell advertising, right? They're doing a hell of a good job at the moment, creating a huge amount of fear in the financial markets, in the health markets, and everything, right? So as a trader, you've got to quantify the opportunities. If you can't, sit back on the sidelines and wait. So as I said, now what you need to do is really start to focus on the core basic fundamentals of the market. Now, understand, we still have pretty poor trading conditions. All the movement is geopolitical, okay? It's all hearsay. It's all buy the rumor, sell the facts sort of stuff. So don't think this is going to be easy. The rally in the US Treasury yields has calmed the market down. If anything, it's given them a false sense of security. The dollar's rallied, everything looks calm again. Well, it's not over yet because this coronavirus is now starting to really get exponential. I saw today the number of reported cases in China is up around 80,000. Come on, that's got to be up around 1 million. You'd think 80,000 is like the local corner market. All right, but so US Treasuries yield rallying back. That's sort of put a fair bit of calm in the market. Now, as far as the pairs, and they're not strong, like a real strong sentiment, but you know what, dollar Swiss and euro are the two pairs that make a lot of sense, especially euro, right? We've got a good support line. It's broken higher, and we've got the US CPI numbers. So most of the currency pairs, even the watch list pairs, which are basically lacking really clear direction, okay, all these pairs are in play today. And why is that? Well, we've got US CPI numbers coming out, right? This is one of the cornerstone numbers of the market. This would be in normal monthly conditions, like one of the most anticipated numbers. What we've got at the moment, the geopolitical side, is going to probably quash this, right? If the CPI numbers come out really, really crap, well, then it goes with the whole need for stimulus and all this sort of stuff. It may push the Fed and the US government's hand. That's probably your only go. Do you buy dollars on that or sell dollars? Well, if it's weak CPI, you'd usually sell. But the fact is, if it's weak, they're going to do stimulus, so the dollar might rally, right? So don't think this is going to be easy by any stretch. If anything, the CPI numbers coming probably a week too early, because if we do get some stimulus, the market will absorb it. Then they'll keep an eye on the coronavirus. We're back to normal market conditions. Now give us the CPI number because it has implications for policy. At the moment, the implications for policy are external geopolitical events, and we just can't measure them, right? So that's the problem. So let's just have a look so it doesn't mean, like if you come back to the watch list, right? So a lot of these pairs, I've got them all as weight because it's not exactly clear whether they're going up or down. As I said, dollar CAD's broken higher, but to me, it looks like it could fall back very quickly. So these are all under weight, but since they're all with that US CPI numbers, they're in play. You may have some short-term trading opportunities here. Am I going to be chasing them? No way. But just keep an eye on, we've got some UK numbers. We've got some, obviously some US numbers, and those crude numbers may come into play for oil. And then we've got the 10-year bond auction in the US, and that's pretty much it. So what we need to be focusing on, well, you need to come back and start focusing on the US equity markets. This is where the price or price movement for the dollar is going to come from. Okay, that's what we need to be sort of really keeping our eyes on and go from there. Outside of that, well, you know what? There's still rumblings of coronavirus, et cetera, across the board and implications, lockdowns. I know all Italian sports have been shut down till I think April 3rd, 4th. They're trying to really get a grip on things. So anyway, that's all we've got. Is it's pretty confusing for professionals, let alone traders who are new to the market. So don't beat yourself up if you can't work out what's going on, because not many people do know. And that's why volatility comes into the market. A lot of people think volatility is like a great opportunity. It's high risk, and there's only volatility because liquidity comes out, because all the professionals, the bankers, don't know what's going on, so they pull their liquidity out of the market. That's why we get the volatility, right? So volatility should be a signal to you to probably slow down and just wait and see what's going on. That's what happens with the markets, and that's the way you need to sort of adopt your trading profile. All right, guys, that's it from me. As I said, there's a fair bit of data there to sort of mull over, have a look through it, see what's going to come out. In my opinion, in my experience through these events, there's not a lot of joy in the fundamentals whilst there's geopolitical events going on. All right, guys, that's it from me. Have a good trade day. Cheerio.